stocks. Basil Read operates throughout Africa and was founded by Mr. Basil Read in 1952. The company ended its financial year with its strongest order book in nearly 6 decades, including a contract to construct a new airport on St. Helena Island. Basil Read has a market cap of 1 billion rand, a price-to-earnings ratio of 10.7, but pays no dividends. Paul, looking at Basil Read, is slap bam within the platinum sector, like Jonathan was saying a little earlier, that some of these companies which are exposed to the platinum sector are likely to suffer.
That's right, because they're busy building number 17 shaft for Impala, which is a massive, massive development. You know, I don't know how many billions that's going to cost. You can imagine sinking a big shaft into a new area there, all the associated concrete works and the cooling and all the other stuff that goes into those big deep level mines. Marius Haynes, the CEO, I like him also, well-spoken. They bought TWP, which is an engineering consulting firm, which also had quite big Africa franchise doing work in mineral exploration and so on. So again, it's got quite a lot going for it in that respect. But you can see also, even in recent weeks, unfortunately, at the end of the day, what counts is earnings and what people's expectations of earnings are. And at the moment, the earnings expectations in this sector are low, 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 low. So
you're not going to go there. Jonathan, what do you make of Basil Read?
Well, I mean, Basil Read, the one thing that makes me a little bit more concerned is it's in a net debt situation. So it's got, if you take its cash less its long-term debt obligations, you're looking at about 200 million net debt. Now, contrast that with Stefanuti. So obviously it increases the risk. The other thing with Basil Read, if you look at its history, it's had some years where it's absolutely bombed out and there's been no earnings. Whereas compare that to Stefanuti, they've been a lot more stable. Also quite a lot of mining exposure, which worries me. And what's the kind of the second derivative from all of these strikes that we're seeing? It's less spend, less capital spend, which then filters through to the construction companies.
Hot or not on this one, Paul?
I'm going to go with not with all of the stocks in this sector,
okay.
So you don't even really need to answer ask me the question. But no, this one not hot as well. That's fine. Let me address that competition issue a little bit later. So for this one, no, not hot.
Hot or not?
I think there's more risk in Basil Read, so not hot.
So 2 not hots on Basil.